Welcome to the QuickBooks Program Review webinar. Please note that this is a pre-recorded webinar. Metrics Learning Program staff will be available for any questions that you have on the specified Q&A session date noted in the email you received for this webinar. You can also reach us via email at any point throughout this program and receive a response within 1 business day. In this webinar, we will review important information in the following topics. This includes Introduction to QuickBooks, creating a new company file, working with lists, financial statements, items, customers and sales, and vendors and expenses. I'm here as a resource to you to guide you through the process and answer any questions you may have. Some information about the exam is the 2012 QuickBooks Certified User Exam is administered through a company named Certiport. This exam is 50 minutes long and consists of 50 multiple choice questions. This exam is an analytical exam, and this means that rather than answering questions in QuickBooks itself, the exam will test you on your knowledge of QuickBooks and the concepts behind the program. There will be no interface of QuickBooks to refer to. Throughout this webinar, I will be referring to the manual available through the Mastering QuickBooks Level 1 course. This manual for Day 1 and Day 2 are available at the bottom of the left navigation panel in the Mastering QuickBooks Level 1 course. This manual will help you learn the verbiage of what you're tested on in the exam and will help guide you through the course and its concepts. Now let's begin the review. Chapter 1 gave you a basic introduction to QuickBooks. As you learned, the training for this course is provided by Real World Training, an outside training provider. The goal of this program is to help you learn the features and capabilities of QuickBooks, learn the most common problems in each area of QuickBooks, and discover the tricks and tips of QuickBooks to help you use QuickBooks to its fullest potential. You first learn the different levels of QuickBooks. They are QuickBooks Online, QuickBooks Pro, QuickBooks Premier, and QuickBooks Enterprise Solutions. Real-world training explains these as rungs on a ladder. You'll want to focus on the features of QuickBooks Pro and Premier for this exam. As the levels of QuickBooks progress, the features of the program become more in-depth. By understanding the features of Pro and Premier, which you will be tested in, you can use the process of elimination if asked on an exam about features of either Online or Enterprise. Chapter 2 discusses creating a company file. Creating a new company through the Express Start is fairly straightforward. In order to create a company through Express Start, you will need to know basic company information and know general operations within the company. Based on the questions in the Express Start, you're able to determine which features you turn on and off in QuickBooks. It is essential that you know the following information when creating a new company. You'll need to know the start date of your business, opening account balance, and determine whether the company uses accrual versus cash-based accounting. Accrual-based accounting recognizes expenses and income in the period they've occurred, regardless if payment has actually happened. Cash-based accounting does not recognize items until they've actually been paid for. Most QuickBooks company files are set up with accrual accounting for management purposes. Once you complete the Express Start, you can use the QuickBooks Setup to start managing QuickBooks. QuickBooks Setup helps you create your chart of accounts, which is the basis of your accounting system. Each and every transaction flows through your chart of accounts. Remember, you are unable to create customers, vendors, accounts, or items through the Express Start. The arrows on the QuickBooks homepage help you navigate the program and shows how common tasks relate to one another. You are able to customize the homepage by going to Edit, Preferences, Desktop View, then Company Preferences. Chapter 3 also reviews miscellaneous topics such as how to delete a QuickBooks company file. Also, it reviews how to remove all transactions from a company file. For instance, if you already use QuickBooks and would like to start over, QuickBooks has a feature that will help remove all transactions from a company file. This option leaves lists, preferences, and service subscriptions in the file. However, all balances are removed. Chapter 3 reviewed lists. Lists in QuickBooks are important. They are the framework to QuickBooks, and you use lists to fill out most forms in QuickBooks. Lists are simple to set up helps save you time when filling out forms, and helps you avoid making errors. There are two different kinds of lists: center-based lists and menu-based lists. Center-based lists include customers and jobs, which are customers and the jobs performed for them. Vendors. This list stores the companies and individuals from whom you purchase goods or services, and 1,099 recipients. And employees, those who receive paychecks. They can be opened from the appropriate QuickBooks Center. There is also an Other Names list, accessible from the Lists menu. This list stores the names of companies and individuals that do not appear on these three lists. It's important that you know what these lists are and what accounts they relate to. Menu-based lists include the Item List, Chart of Accounts, Class List, and Payroll Item List. They are available via the Lists menu. You can also open the Item List and Chart of Accounts from the home page. You'll want to know these accounts and the functions they are associated with. With QuickBooks Pro and Premier, you are limited to 14,500 names in an individual list. With QuickBooks Enterprise, however, it is unlimited. This is an example of one of my test questions. If you need to see the total number of all 4 names lists, you can use the shortcut F2. This allows you to view not only the product information, but also the total number of names in a company file. A name can only be included on a list once. Once entered on a list, the name cannot be moved to another list. The only exception is the Other Names list. It is recommended that if you have a name that must be on 2 lists, you make some variation of the name on the second list. It's important that you understand how to add an entry to a list, as well as deleting, editing, and merging entries. Please refer to pages 30 through 32 of the Day 1 manual to see how to perform these tasks. Chapter 4 covers financial statements and the basic financial statements available through QuickBooks. In QuickBooks, the chart of accounts is basically your financial statement. Each account in the chart of accounts becomes a line on either the balance sheet or the profit and loss statement. The chart of accounts is made up of 5 types of accounts common to all kinds of businesses. They are the income and expense accounts, used by the profit and loss statement, and the asset, liability, and equity accounts, which are used by the balance sheet. Simply put, an asset is what your company owns. A liability is what your company owes. Equity is assets minus your liabilities. Each line in the chart of the accounts becomes either part of the balance sheet or the profit and loss statement. Please refer to the account type guide in the Day 1 manual on page 38. This is helpful and a simplified way of explaining account types. You'll need to know how to create accounts and how to designate sub-accounts. Also, how to change an account into a sub-account. To do this in the chart of accounts, you'll select the diamond to the left of the account you'd like to make a sub-account. Click and drag it below the parent account, and drag the diamond and the account to the right. In Chapter 4, you also learn how to collapse financial statements by using the Collapse and Expand buttons in the financial statement. Lastly, you learn about journal entries. Journal entries are used to adjust errors, making year-end adjustments, and for entering transactions that cannot be entered in the built-in formats. Chapter 5 covers items in QuickBooks. Items are anything that your company buys, sells, or resells in the course of your business. Remember, any item on a purchase order, invoice, or estimate must be set up as an item first. When you create an item, you associate it to an account. When that item is used on a form, it posts an entry to that account and also an entry to the other appropriate account. Items are the behind-the-scenes accounting for sale and purchases. Items allow you to track quantities and dollar amounts for things purchased and sold. You use service items to track what work or services employees do for customers. You must know the difference between inventory parts, non-inventory parts, and inventory assembly because you may be tested on this. Page 48 of the Day 1 manual was very helpful in describing this. Chapter 6 and 7 reviews customers and sales. A customer is anyone who pays you. On the home screen, you'll see the customer menu. The Customer Center contains information about customers and jobs you perform. There are 5 ways to record sales. The first is an invoice, which is used when a customer owes you money and will pay you later. A sales receipt is used when a customer pays you at the time of sale. The third way is a statement charge. This records charges and bills you at the end of a period. The fourth is a deposit, which you can use if you do not use any of the other previous ways. Lastly, you are able to record sales through other programs such as Excel or Peachtree. There are several that are compatible with QuickBooks, which can be viewed on Intuit's site. We recommend that you focus on the first two methods of recording sales. Next, let's review invoices. There are 3 steps to the invoice process. They can create an invoice, receive payment, and make a deposit. Remember, in order to invoice a customer, you must first add them to the customers and jobs list. Invoices track accounts receivable. When adding a customer, you can add as much information as you see fit. If a customer is not on the customer and jobs list, you can type in their first name or company name, and a message will appear that gives you the option for a quick add. Please refer to pages 58, 62, and 63 for information on the invoicing process. When recording a sales receipt, you can go through a similar process to what you do for creating an invoice. The only difference is that a customer is paying at the time of sale for a sales receipt, and you do not need to record a customer's name. There are also restrictions for statement charges. I did not have any questions on this, but page 68 of the Day 1 manual will help you understand these restrictions. Chapters 8 and 9 reviewed vendors and expenses. A vendor is anyone you pay, except employees, who are tracked through payroll. A vendor can mean subcontractors, utility companies, your landlord, tax agencies, or suppliers. Just as there is a customer center, there is also a vendor center, which contains all information about vendors. There are 2 ways that you can enter and pay bills in QuickBooks. The route you take depends if you want to track your accounts payable. Tracking your accounts payable allows you to always know how much you owe vendors. Therefore, you will enter your bills before you pay them. If you do not track accounts payable, then you directly write the check to the vendor. You can write a check when you don't need to enter a bill. So, there's always a few avenues you can take when writing a check in QuickBooks. You can have a check printed at a later time, or enter the information to reflect a handwritten check. In addition, if your company uses a debit card, you can track transactions by using the check form. To distinguish that it came from your debit account, simply put debit where the check number would go. QuickBooks gives you the option of voiding or deleting a check number, which can be confusing. If you use the check number, void the check. If you do not use the check number, delete the check. To check for errors in QuickBooks accounts, you must reconcile bank accounts. This makes sure that your records match with the bank's records. If the beginning balances don't match, there probably has been an error with the previous reconcile. If the ending balances don't match, it is likely there was a decency in the account center. Page 92 of the Day 1 manual gives step-by-step information about this process. This concludes the QuickBooks Program Review webinar. Thank you for attending, and we look forward to hearing from you at the Q&A session.